Today, I'm going to have Alberto Diaz. He is a mortgage officer with MOR. And I want to thank you guys for tuning in today because he's going to show us a little few ways to get your loans for your properties. Not necessarily the conventional way, but a different innovative way to do it nowadays. So good morning, Alberto. Thank you for joining us today. Thank you for tuning in, guys. Let's get started. How are you doing?
Good morning. I'm doing good. It's a pleasure to be here. I'm excited.
No. You know what? I just want to say to the audience that we actually we met on the new way on Instagram, and you're a mortgage officer and I'm a real estate agent, and I like what you're saying and what you're doing there for your clients, and I just wanted to bring you on today so that you can tell us a little bit about the different ways that people can actually buy their houses now, because there's like 101 ways to be able to get a loan. But before we get there, I want you to tell me a little bit about yourself, like where you're from and what got you into mortgage, and specifically why MOR.
Right. No, I mean, absolutely. So, well, I'm from Miami. I'm born and raised in Miami. I actually went to school in Doral Academy. I went to middle school and high school there.
My daughter goes there.
Oh, yeah. That's awesome. Yeah. So I went there back before, that new building that they have. It was before that was built. So it was a while back. But I was born and raised here. My mom's Cuban. My dad's Colombian. And kind of like what we were talking about before we started the podcast, my background or my journey into mortgages was a little bit unconventional. But let's be honest. I mean, most people don't necessarily go to school planning to do mortgages. So I think most people's journey to mortgages is always unconventional. But personally, I went to the marketing route. So I have a bachelor's at FIU for marketing and for international business. And then after college, I did a couple marketing jobs here and there. I did a couple sales jobs. And then eventually, I've always wanted to invest in real estate. So that's always something that I've personally wanted to do, passion of mine. So I figured, marketing realistically doesn't pay that good compared to mortgages. So I was like, okay, well, the money is there. Second of all, I can make connections and make them, grow my network. And then third of all, I can learn how the money moves around and learn how to fund, deals and stuff like that when I personally want to grow my portfolio. So that's kind of how I progressed from marketing to mortgages. And specifically more, a couple reasons. First of all, it's Joel. He's one of the owners of the company. I know him since we were little kids, like 10 years old. We went to summer school together, all that stuff. So I know him for a while, and I always saw him post about it. So I him when I got interested in mortgages. And also because of their mindset, they're a very modern company. They're very, they have a very modern approach, and we could go a little bit more into details, down the line about that. But yeah, it was about that. It was both the culture, how modern they are, and also because I know Joel from a while back.
Got you. So he basically you were looking at him doing his thing, and you're like, well, that sounds interesting.
Exactly. He kept posting on Instagram. I sent him a DM. I'm like, hey, what do you do?
Hey, what are you doing? No, you know what? That's exactly how I met you. Because you're posting on Instagram, and I was like, oh, I like the way that he's conveying this message. So let me just dig a little bit more. So like I was mentioning in our introduction, mortgage comes in a variety of ways, and people offer mortgages like the conventional loans. But can you explain the key differences between some of the most popular mortgage products out there and who this might be suited for? And how do you guys help other people get loans not the conventional way, for example?
Right. Well, I mean, definitely the most popular is without a doubt, your FHA, your conventional loans. Those are the most common ones because they're the very straightforward, 2 years tax returns, have, pretty good credit, stuff like that. So those are the most common ones, which obviously we do, but where we mostly like to stand out. And personally, our broker's most popular products are what falls under the non-QM world, right? And non-QM just stands for non-qualifying mortgage. Personally, I like to call it creative financing, right? Which is basically any type of financing where you have to get a little bit more creative. Maybe, you don't have 2 years tax return, right? Because maybe you just started, or also, maybe you're a business owner and you don't report that much at the end of the year, so your tax returns aren't looking too pretty. you're a foreign national, I-10 borrower, basically investors, with DSCR. So that's usually, at least for more, that's our more popular products. And yeah, it's a great option compared to like the conventional and the FHA stuff.
Oh no, this is good to know, because people believe there's just only one way and one way only to do, to get a mortgage loan, and especially for those people that are, like you said, business owners, 1099s. So the mortgage process, we already know, could be a little bit of overwhelming, and when people are not into it, they're thinking like, oh my God, I would like to buy a house, but this is so much. I just believe I will never be able to do it, especially for first-time home buyers. Could you walk us through the steps that your team takes to simplify this process for your clients?
Yeah, the mortgage process is very daunting, even for us, because I look at it from an inside out perspective. I see how labor intensive it is, all collecting all the documents, sending this and then just communicating with a bunch of people. So I can imagine the perspective from the buyer, just being on the outside and not really understanding everything that's going on. So, I mean, the way we really walk through our steps is it's quite simple in the sense that we basically hold your hand throughout the whole process, right? Especially a lot of my clients are Latinos, right? They only speak Spanish, don't really understand English too well. And unfortunately, a lot of the mortgage process in the mortgage world is in English only. So the mortgage application is in English. A lot of the loan estimate, a lot of the documents that you need to sign are in English. So, it could definitely be very stressful and overwhelming for them, if they don't really understand the language. So it's a lot about holding their hand and explaining everything. If I have to go through every single word in the loan estimate, I will, and translate everything, and just making sure they understand everything, because transparency and communication is key. As long as they understand everything, then their experience is going to be good, and hopefully they can get into their new home.
No, I mean, what you just said is key, Alberto, because when a confused mind doesn't make a decision. So if you don't understand what you're signing, you don't understand the process as easy as anyone that's in the business believe it is, it will paralyze somebody, because you're afraid you're signing a document, and every time you're putting your name on the dotted line, you think like, oh, I'm in trouble. Am I signing my life away?
Yeah.
It's very scary, like you mentioned, especially for our Hispanic families. I mean, I'm telling you, I'm a real estate agent. Some people get really, really scared just to sign a contract to sell, or just to put something on the market to rent. And I said, wait, why am I signing? And I said, well, this is just a formal paper in order for us, obviously I explain everything else, but for us to work, for us. Because sometimes people say, oh, you just sell my house. No, you need to tell me that I'm allowed to actually sell your house, and this document is giving me permission to do this. But people get very scared. To the point that they were like, you know what? I'm not going to do anything. I'm just going to do it myself. And I was like, so when you explain the process and people feel comfortable, that's why I think it's very important, like people like yourself, that put this stuff in there, out there online and in your videos, so that simplifies the process and makes it less scary. So let's just shift it a little bit about the process. I understand that just the mortgage itself, it's hard, but let's be honest. The interest rates are through the roof. And what scares people the most is that they're not able to make their payments, the monthly payments, that they're going to lose their house. Because this is what people tell me all the time. They tell me, Betty, but what, I shouldn't buy a house. What if I'm not able to pay my mortgage? And I was like, well, you have been renting for 10 years and you are paying a mortgage. You're just not paying your mortgage. You're paying somebody else's mortgage. That's the best way that I like to explain it, because you are paying a mortgage, just not yours, but you are committed to paying a rent, which, by the way, you also had to sign a document. So what did you say the changes in the interest rates affect the mortgage strategies, and what advice do you usually give your clients to help them secure the best possible rate, if any?
Right. No, I mean, yeah, interest rates definitely a hot topic now. It's been for a while, right? Because it's been high for a while. And this is why I tell all my clients, and it's pretty simple, right? Like, if you ask me when is the best time, I'm always going to say that, if you can afford the mortgage payment now, then it's the best time, right? Because let's say let's say you have a 7% interest rate and your mortgage payment is, I don't know, 3,600, right? If you can afford those $3,600 a month right now, then there's nothing holding you back to doing it, right? Sure, I'm sure, the interest rates are going to go down. It could be better, but that's fine. You can refinance down the line. It's a fixed rate, 30 years. If you can pay the 3,600 now, then you can, then I would say right now is the right time. Just because, the more you wait, appreciation is one of the biggest things that people overlook. So if you wait 1 year, I think if I'm not mistaken, the average appreciation is like 4.9 or something like that, like 4.5, 4.9. If you wait a year, the house is going to be about 5% more expensive, right? And plus, if interest rates go down, everyone is going to flood the market, which is going to make prices go back up, like you saw in 2021, 22, when there was people making over listing offers, stuff like that. So I always say, if you can afford the mortgage payment at this present moment, then there's really nothing holding you back. And like you were saying, like if you can make the rents, a lot of people are paying $3,600 rents. The only thing is, of course, the DTI, the debt to income ratio, which is what the banks use, the lenders use to qualify you. So if your DTI is okay and you can make the 3,600 payment, then the best time is now. And when it comes to the second part of your question, when it comes to securing the best rates, it's all about options, right? It's all about options. And like, for example, with us as a broker, we have plenty of lenders that we work with, over like 25, 30 different lenders. And each lender has different pricing, different requirements, different programs. So, our goal is to find you the best rate, in the sense that we're going to go and shop it and see which one is the lowest one this present moment, and we'll go with them. But also there's alternative like products out there. For example, the 321, the 2-1, and the 1-0 buy down, which for those of you that don't know, these are temporary interest rate buy down programs. So, when you're purchasing a home, most likely the lender is going to tell you, would you like to, buy discount points? And these discount points are money that you pay upfront to lower your interest rate by a certain amount. And discount points is long term, right? This is for the whole life of the loan. But the temporary buy downs, which is at 321, the 2-1, and the 1-0, these are only temporary. And essentially the 321 means that the first year, the interest rate is going to be 3% lower than what it currently is. So let's say, for example, 7%, right? So the first year, your interest rate is going to be 4. Second year is going to be 2% lower, so it's going to be 5. The third year is going to be 1% lower, so it's going to be 6. And then by the fourth year, it goes to 7 and it stays at 7, right? So personally, I recommend that to a lot of people right now, just because a lot of the experts and, the market, people who study the market and stuff like that, they're expecting rates to go down within the next year or two, right? So if that's something that you believe, which hopefully, fingers crossed they do, if you believe rates are going to go down, if you get like a 2-1 or a 3-2-1 or a 1-0 buy down, you'll have that low rate for the first couple of years. And then once rates drop, you can refinance and then just keep it for the rest of the 30 years. So that's usually why I tell people, if they're very rate sensitive, if that's like the make it or break it for them. But yeah, at the end of the day, if you can afford the mortgage payment at the current rate and your DTI works and everything like that, then, I'd say buy now, always.
No, and then, you know what, and to your point, if the interest rate is what have you hesitant, however, this is what I would recommend to my clients, okay? Because I'm on the other side. I was like, look, I don't want you to be house poor. I want you to be able to have enough money. So the main thing that you want to do is make sure that you can afford the mortgage at the highest rate, at the highest. Even in 3 years down the line, that you know that you're able to afford it. But if you want to get the 3-2-1 buy down, then you can enjoy the lower premium now. And you hopefully, like you said, in the future, if the mortgage rates change, then you can refinance and continue to do this. However, I will advise you to be able to make the mortgage payment, because at the end of 3 years, I don't want you to lose your house, because you cannot.
Of course. Yeah.
So that's the advice that I will give you.
You know what's something interesting? I just found out about this yesterday, I think. There's this thing called, it's like, how there's life insurance and health insurance and stuff like that. I just found out about a specific program or insurance because I was talking to this other realtor, and she does real estate, but she also does like financial advisor and stuff like that. And she was telling me that there's this thing called income protection. which is like kind of like a life insurance where you pay like a monthly, just like any type of insurance, you pay monthly. And the whole point of it is like if you lose your job, for example, with COVID, a lot of people lost their job. The income protection, like basically like you keep your income, for the rest of the year, so you don't, lose paying on the mortgage or lose paying your car, stuff like that. And I thought that was pretty interesting. I haven't really looked into it too much because I just found out about it yesterday. But that's also an interesting option out there, that we could tell our clients.
No, it comes to mind the Aflac commercial. I think that's what it is. Everything the dog.
It might be.
Aflac is like that. Is protecting you if you lose your job. That's what that is.
Right.
It's just that sometimes we don't pay attention. The commercial. I think let's look it up. I think that's what it is. But obviously they have different products for the same thing sometimes, just like a mortgage. So that might be a different. We're not doing an Aflac commercial sponsored here. But this is really good option to know. And this is why I like to have conversations with professionals just like yourself, because you bring to the table, different perspective that probably they didn't know or I didn't know. Because to be honest with you, I talked to a lot of mortgage lenders, and every mortgage lender have their little niche, that they specialize in. And this is good to hear from your perspective and what you and your more company have to offer. So I have other questions that I wanted to ask you about technology and how that technology changing and that transformation. Every industry has been affected. So including us, real estate and mortgage officer. Can you tell us any technological tools or innovations that your mortgage uses to enhance the customer experience?
Yeah, absolutely. I mean, so remember early on when I started giving my introduction, I mentioned that part of the reason why I really like them was because they're very modern. So this is a perfect segue for that, because they've taken a very modern approach in the sense of the way we use social media, the way we use technology, everything like that. So I mean, I have to mention AI. That's a can of worms that we cannot close again. It's definitely going to change how. Yeah, it's open and it's not going to close. It's going to change how every industry and society overall works. And there's already a lot of mortgage-related AI stuff out there. For example, we have this one program. It's a HELOC, right? The home equity line of credit, and it's all underwritten. It's all done through AI. So you could fill out the application, and it's all they do the whole process through AI. And within 5 days, you could get your money, your equity out of the home, and you can use it for whatever you like. So there's already mortgage programs out there that are implementing AI. And then us, and as a broker, we also use it for lead generation, for, follow-ups, for nurturing. For example, like we have our CRMs, and our CRMs have AI in it, where it's not like a crazy AI. It's just basically like conversation. So it keeps up with, for example, if if there's a lot of old leads that they're like, oh, I'm going to wait, whatever, you can use this AI like CRM basically to kind of nurture and talk to them and kind of see how do the dirty work in the beginning, right? Like figure out the discovery questions and everything, and then we can step in and go with the rest and do the actual calls and everything like that. But I mean, technology is awesome, and then social media is really, really good as well. When it comes to networking, meeting people, and just growing your business. So, we've definitely been implementing a lot of technology.
No, this is great. Yeah, you're right. I mean, AI is everywhere. And when you can use it to, I don't know, make it easier for our clients, for their experience, because the truth is, we're not awake 24/7, but somebody might be wanting to look at stuff or apply for things at midnight. And they'll be able to get some of the answers, the questions answers through there. And then later on, you can pick up for a more in-depth, a solution. So you mentioned throughout this process, you've talked about brokerage and how you go out in the market and help find the best rates through different, programs. Can you explain to the clients what that means? Because I know that for our audience, a lot of times they believe the only way you just go to the bank. Let's go to the major brand, because I need to go to the bank is going to say no. So what do you, as a mortgage broker, what's the difference between like, let me go to the bank or let me go to Alberto Diaz, for example? What is different about that? And what should people know about it?
Yeah, absolutely. I mean, honestly, that's a very good question because, again, not a lot of people understand the mortgage process and everything like that. So, I mean, the difference between a mortgage broker and a direct lender is that if you're going to a direct lender, it's like, I'm going to put it in the perspective of like going to Publix, right? Or to the shopping center, right? So let's say you want to go to Publix to buy, I don't know, a can of beans of Goya, right? And then that's the first thing that came up to my head. You can either go to the Goya factory, right, which will be the direct lender, and be like, hey, I want this. Or you can go at Publix and look at the aisle where they have all the different brands, and pick your option, right? So that's what the mortgage broker does. We work as like kind of like the middleman in the sense where you tell us your situation. We structure the deal. We figure out what exactly is the best option for you. And then we go out there behind the scenes and look for the best program, the best option for you, and see it. Because for example, we could have like 5 different lenders that each have the same product, but they'll have different pricing. One might be 0.5% lower. The other one might offer, an appraisal credit, so you don't have to pay for an appraisal. The other one might offer this. So, our basically our goal is to find the best one that fits you specifically and give that to you.
Basically, so you're not locked into just one lender criteria. So when people come to you, to Alberto Diaz specifically, you're gonna go out there, and for that day, you're going to fight for the best choices. It's like you said you're going to, I think to you, using that beans analogy, let's not use Goya, let's use beans, right? You just say,
right,
you want to do rice and beans, right? Let's go to Publix again. Well, there's a whole bunch of beans that you can pick from. Which one is going to do the best based on your budget? If you only have $2 to spend, and this one is $205, but this one is $199, we'll just go to the $199 one, because now you'll be able to make rice and beans. And that's why. But if you, for the get-go, go to Bank of America, for example, and they tell you, I'm sorry, it will cost you $205, but I have $2. Well, no, sorry.
Yeah.
You go to Alberto Diaz, I was like, okay, I can work with $2 or one, and let's go see what's out there. And that's the difference, because people sometimes get scared, like, so what do you mean? I don't have to go to the bank? I promise you, like, my whole family lives here, my father's side and my mother's side, and they keep telling me, no, because the bank says this and that. And also, those are big banks. Sometimes they don't want to work with the little guys. Go to a mortgage broker.
Oftentimes the big banks also are very restrictive when it comes to like the options that they offer and what you need to qualify. And also a lot of them don't necessarily, I'm not trying to say anything bad about the big banks, but don't necessarily have the best price. There's a lot of good options out there that have better rates, lower fees. It's just overall, it's just a lot better. So definitely, it's definitely better to go the broker route.
No, I mean, it's not because you're a broker and you're here talking to me. The reason they don't have the best rate is because they already have the clients, and the clients know them. And a lot of clients believe that's the only way to get a loan. So then to me, they just take us for granted to give us the highest. That's what I think it is. It's like, well, you're already here. You either do it this price or you don't. And then people leave, go about their ways. But okay. So I digress. Okay, so I know you talk about HELOC. Now, let's dive a little deeper. Like, who is the HELOC for and what people actually use it for? Because if you never bought a home, you don't have a house, can you use a HELOC?
Yeah, no, if you don't have a house, then you definitely can't use a HELOC. So the whole, what a HELOC is, it stands for Home Equity Line of Credit, and essentially is just like a credit card, right? You get a line of credit for the equity that you have in the house. So if you purchase a house for $400,000 a couple years ago, and then now it's worth $600,000, you probably have a little bit over 200, because it's the 200, the difference, plus what you've been paying down throughout those years, right? So you probably have a little bit over $200,000 of equity. And basically with the HELOC, you're able to tap into that equity and use that as a line of credit for whatever you need, really. So you can use it for debt consolidation, right? So if you have car payments or you have, credit cards that have 22% interest rates, you can use it to pay that off, to lower how much your monthly payments are. You can use it to renovate your home. You can use this. I mean, some people use it even for vacations, which I wouldn't recommend it, but but that's what it is, right? It's a line of credit, just like a credit card, where you're able to take money out of the equity and you can put it back in, and you're essentially just reusing, the money you've grown in having a home.
Now, to be clear, you're borrowing against your house. You do have to pay that debt. It's not for free. Then you have to make sure that whatever you were paying on your credit cards with a higher interest rate, now you're going to pay it on that home equity line of credit. I just wanted to make sure that it didn't go over people's head, because it is really important for people to understand these terms, because it's good to know. I mean, especially now, a lot of houses, if you bought before 2020, even if you bought in 2020, 2021, you have a lot of equity in your property, which you should only use smart or to invest, but not to just vacation.
Yes, no, definitely no vacations. Absolutely not. Yeah, I always tell people, I work with a lot of investors, so I always tell people, to use it with to invest, because that's a very great use of your equity. But going back to what you're saying about the payments, I could go a little bit more in details. I mean, essentially, you're going to have, it's a 30-year fixed rate, right? So it's just like any regular loan. The first 5 years is where you're able to pull the money out. So the first 5 years, you're only paying interest only on what you pull out, right? So if you pull out 10,000, you pay interest on just those 10,000. If you pull out 100,000, you pay interest on that. And then that's for the first 5 years. And the first 5 years, you're able to put money back in, to refill, just like a credit card. You could pay it off and stuff like that. After the 5 years is over, you can no longer pull the money out. Like, that's it. You used your equity. And then the next 25 years is where the repayment period comes, which is where, let's say at the end of the 5 years, you had used 100,000 and you never put it back. So, you have a balance of 100,000. Then you just, for the next 25 years, you're repaying that $100,000. And at that point, it's not interest only anymore. It's principal and interest, just like a regular, home mortgage, right? So definitely use it very wisely. It's not for vacations or nothing like that. But, if you're going to do, for example, if you're going to pull out 200,000 and you're going to use that 200,000 to buy 1 or 2 investment properties, it makes sense, right? Because maybe you're repaying after 5 years, but you have 2 other properties that are building equity. And, if you're renting it out, it's collecting rent. So, it has to make sense, right? It's not for everyone, but it's definitely a great, great option out there, especially now, because a lot of people have a lot of equity in their home. Like you were saying, a lot of people don't want to, get rid of that 2-3% rate that they got a couple years ago. So they've been in their house for a long time and they have a lot of equity building up. So if you have a lot of credit card debt, stuff like that, it's a great option out there to explore.
Yeah, and I mean, if you do get into 1 or 2 properties, then eventually you'll be able to do the same with those properties and continue to do snowballing. Okay, so given the diverse population in Florida, Miami, even right here in Doral, how does More Mortgage ensure that it serves all segments of the community, including those who may be first-time home buyers or not familiar with the mortgage process?
Right. No, absolutely. I mean, honestly, as a mortgage broker, it's my duty, I can say, as to we do not, there's no discrimination at all. So if you're a first time home buyer, if you work, if you just started working, whatever, I never tell people no off the bat. I first say, okay, let's explore our options and see what we're working with. We see maybe if they have a low credit score and they don't qualify yet, then we work with them. We have, I know a lot of people who do credit repair, so I can connect them to them, get their credit up. Once their credit is, we can continue the process, stuff like that. So, we work with everyone, right? And going back to what I was saying earlier with the Latinos, right? Like Spanish, especially here in Doral, I think I would say it's like the primary language in Doral. So that's also another thing where I'm fluent in Spanish. I've been speaking Spanish since I was a little kid. So we are very accommodating and we work our way to whatever we need to do to help the client.
And talking about Doral, you are here in Doral, right?
Yeah. Yeah, our office is on, where Doral City Place is? Mm-hmm. We're right across the street from City Place, like right next to it. There's like a couple office buildings there, so we're right there.
Like across City Place, like across 36?
Like behind it, like on 82nd. Yeah, like on 82nd, right by City Place.
No, that's awesome. That's awesome. Okay, so we need to talk a little bit more right after this. After this podcast, yes, because I'm always looking to partner right here with my folks here in Doral. So, okay, looking forward, Alberto, to the future. Are any upcoming trends or regulations in the mortgage industry that potential home buyers should be aware of?
I think the biggest change that's happening, and it's been the talk in our industry, all over, right, is the NAR settlement, right? The whole NAR settlement about the commissions, how buyer and seller agents are getting paid. I think the biggest thing that clients or buyers should know or understand about this is that the dynamic between how a buyer agent is getting paid is going to change, or who knows, right? We don't know yet. But if it does change, if there's more sellers saying, hey, I do not want to pay for the buyer agent, I just want to pay for you, the listing agent, then that gives the buyer no choice but to pay for the buyer agent, right? And personally, as a mortgage broker, I see on a daily basis, a lot of my clients, they're saving up a ton, just to pay for the down payment and the closing costs. And then now they have to add, the buyer agent fee, which is another added expense, so unless sellers are going to continue doing what they were doing, or, there's more seller concessions being given out and stuff like that, I definitely think that's a big trend that a lot of people need to take into consideration. Because now it's not just closing costs and down payment, it's closing costs, down payment, and the buyer agent, so that's definitely might affect the purchasing power of, a lot of people. So that's definitely worth, taking into consideration as well.
No, thank you for your input. But let me tell you something, Alberto. My clients will be fine. I wouldn't sweat it. I wouldn't sweat it at all. Because the truth is, I right now negotiate every time. I always try to negotiate because that is the power of a good buyer's agent. Mm-hmm. You try to fight for your client to get their best rates if you're a lender, and for us to get the best price if you're getting a house with buyers and sellers concessions. So I think people shouldn't be afraid of that, because in America, we've always found ways to help the consumer. Right. And I don't know if you heard about Fannie Mae and Freddie Mac. They've already making changes so that they can allow the buyers to roll their commission fee into the loan. I don't know if you're aware of that, but this is happening. Now, the one that that I'm really, really excited about is for the changes that the VA have to make. Because for the VA loans right now, you just cannot pay, period. So they're going to have to adjust it. So I'm excited to see what those changes are going to be for right now. Fannie Mae and Freddie Mac, they're on board. They're trying to say, hey, we can roll it into the loan. So the truth is that when the house is sold right now, they sold with the buyers and sellers agents commission there. So that is what that reflection of the closed house is reflecting in this moment. So in the future, it's going to still reflect the same thing. Whoever, no matter who pays it. So if I ask my sellers, hey, my client are able to buy this property, they can put a down payment, they have closing costs, however, they don't have extra for commissions. And if they consent to it and they put it in a house, it's still going to be the same price. And whoever doesn't allow that, then we'll find somebody that does. And you just move on, you move along. And either the lender allows it to be rolled into it, or the seller allows to come out of the, purchase property. I don't think it's going to be a change, but I don't think it's going to be as drastic or bad for the consumer as people might think.
Yeah. No, and I also think that a lot of sellers are going to take that as because think about it, if sellers decide, no, I'm not going to buy the buyer, I'm not going to pay the buyer agent, right, just the listing agent, it's definitely going to be, probably a little bit harder to sell that house, right? Because, a lot of buyer agents, if let's say their buyer doesn't necessarily have the money to pay for the buyer agent, they're going to be trying to get that either seller concession, negotiate, or have the seller pay for it. So, I'm sure a lot of sellers are still going to continue paying for it just to stay competitive and sell their house quick, So I don't think it's going to be too crazy, but it's definitely worth, keeping in the back of your mind just in case,
No, yeah, yeah. So you're 100% spot on. Kind of like if you do, if you are that seller that don't want to pay, you're going to have to know that your property might just sit on the market for a lot longer, and it goes
Mhm.
expired, or you're gonna have to compete.
Yeah.
That's how it is. It is how it is. That's why we love America. People have a choice to be in the marketplace, and you play however you want to play, and then you get the consequences. Either you win or you get out of the game.
Right.
That's what's gonna
Supply and
happen.
demand. Yeah.
Yeah, yeah, exactly. And it's gonna potentially have more supply because if there's more houses that are not selling as quickly, then that means that the buyer might have more choices to purchase. I don't know. Let's see. So finally, Alberto, because I know you're very, very busy, what advice would you give to someone in Doral specifically looking to purchase their very first home or refinance their current mortgage despite the current market conditions?
Right. So, I mean, if you're looking to purchase your first home here in Doral, I would say, talk to a mortgage broker, talk to a realtor, both of us, right? So talk to a realtor to understand what areas in Doral are the best. There's a lot of new communities that are being built and stuff like that. So definitely figure that out and try and find good deals. But also talk to your mortgage broker and see if it makes sense. Because a lot of it has to do with your debt, your DTI, your debt to income ratio. Make sure you qualify and everything like that. So if you qualify and everything makes sense, then go out and look for homes. But I would say the number one advice is before you start falling in love with homes on Zillow is to talk to a mortgage broker, make sure it makes sense, the numbers make sense, that you're comfortable with the monthly payment, you're comfortable with the closing costs, that you can afford, and then talk to your realtor and try to find that perfect home. If you're in the refinance side of things, the numbers just need to make sense. So right now, a lot of people have really good rates when it comes to like 2-3%, because like everyone refinanced during 2020 and 2021. So not a lot of people are very interested in refinancing. The only time it makes sense to refinance is for debt consolidation. So if you have credit card debt, car payments, student loans, whatever it is, right, that adds up every month. And those tend to have a lot higher interest rates than what we're currently at now in mortgages, right? So mortgages right now, we're maybe like in the 7, high 6, right? And a credit card right now, it's anywhere between 18 to 22. A car, it could be in the double digits, like 10, 12%, depending if it's a used car, stuff like that. Student loans are also, I think, in the double digits, or like at least 9. So overall, like if you aggregate all these interest rates, it's going to be higher than 7. So if your debts are high and you want to consolidate it, then refinancing makes sense. And that's probably going back to what I was saying. That's where you talk to your mortgage broker so you can run the numbers, see like, okay, if I lose my 2%, my payment goes up to this, but then I pay off these debts. So now it actually goes down to this. So, that's the number one tip, which is, talk to a professional that knows what they're doing.
No, this is an excellent advice. And to add to what you just said in reference to see if you have your debt to income ratio and if you qualify, if you think you don't qualify, because sometimes people think they don't qualify. If you think you qualified or if you think you don't qualify, still go talk to Alberto. Why? Because Alberto will tell you, you don't qualify now, but if you do X, Y, and Z, you will. Because sometimes all it is like either just pay this off, or if you're paying here and there, just make sure that you pay this one and not this one. Because I have clients that tell me, oh, Betty, I'm going to do this first. And once I do this, it's like, no, talk to the lender, because sometimes what you think is important might not be. And what you think is not important is what they're actually looking for. So talk to them first and let them tell you where to allocate the resources that you do have, so that if you don't qualify now, if you do what they ask you to do, then you do qualify in 3, 2, 4, 5 months down the line.
Yep, exactly.
So Alberto, how can people find you? Like if they want to get a hold of you, where could they find you? I get a hold of you to get to the process to try to potentially buy a property.
Yeah, I mean, I would say the best way is through Instagram, like where we met. So it's my username is Alberto and then Lens. So it's Alberto Lends. And then that's probably the best way. You can send me a message, and or you could just call me or text me. My number is 786-239-4998. So that's also the direct number. So either option works.
Alberto, thank you so much. You are very, very generous with your time, and I think you gave a lot of information to our audience. I will I will hope that you come back and tell me as things change so that we can continue to, keep our audience informed of what's going on in the real estate market, especially right here in Doral. Guys, thank you for tuning in. I see you next week. Thank you for coming to Building Connections Doral Talks. See you next week. Bye. Real quick, calling all Doral professionals, entrepreneurs, and community influencers. Are you ready to showcase your business, share your knowledge and experience with our engaged audience? Building Connections Doral Talks invites you to become a guest speaker on our podcast. Share your unique perspectives and inspiring stories with our listeners. We believe in the power of your voice in shaping the conversations right here in Doral. Click the link below to submit your information and be part of our next episode. Join us in building connections, sharing knowledge, and growing together. Don't miss this opportunity to be a featured guest on Building Connections Doral Talks. Tune in, connect, share, and grow together with Building Connections Doral Talks, reshaping the way we engage with the diverse voices of Doral, one guest at a time. Doral Talks, your voice, our community. Click the link now on the show notes, the screen, or in the comments below, or just scan the QR code to submit your information as a guest. I hope to see you soon. See you in the next podcast. Bye.